Hello and welcome to the August 12th edition of the Gold, Goats, and Guns Market Report. I'm Tom Luongo. We have a lot to talk about. We need to get to it. All right, let's talk about Turkey. So the headlines last week were all about the implosion of the Turkish lira and the final exposure of the structural imbalances in the Turkish economy. And they reached the point on Friday of finally causing a breakdown in the euro as we start to get contagion risk coming from the blow up of emerging markets. So let's back up for a couple of seconds because I wrote an article on Friday that went completely ballistic in every direction. And I want to make sure that we're not confused about what I'm talking about in a kind of macro strategic sense about Turkey and Russia and China and the United States in the geopolitical sense, and tactically what's happening here. No one, including myself, is arguing that Turkey's structural imbalances of its trade imbalances and its foreign currency imbalances are not self-inflicted. They are. Turkey has over $220 billion worth of corporate debt that's been financed through the use of U.S. dollars. The U.S. dollar is starting to rise, and the situation is spiraling out of control now because the spat between the United States and Turkey, and this is the strategic part, is increasing because the Turks are trying to align themselves under Erdogan with the East. And for that reason, the U.S. government is pushing harder on Turkey than the markets were willing to allow to this point. So, as always, the markets are terribly, what's the word I'm looking for? There's a terrible inertia in market thinking, right? Market analysts are lazy. I don't care what anybody says. No, the best of them are lazy. Reading even some stuff on Zero Hedge this morning and describing the situation, and everybody has been, everybody says the same thing. Well, everybody's known about the problems in Turkey for all this time, and, it's been unraveling slowly, and then all of a sudden, unexpectedly, all at once, but it always works that way. Everything always happens slowly and then all at once because it's a matter of perception. All of a sudden, everybody realizes, oh my God, the U.S. and Turkey are not going to, they're not going to, kiss up and make nice here. In the same way that the Russians weren't going to knuckle under in 2014 during the ruble crisis and the early drop in oil prices. So all of a sudden, everybody got the idea all at once, and the panic sets in, and that's typical human psychology, and the maddening of crowds and all of that. And it happens. Everybody looks around at everybody else going, are you still invested in Turkey? Well, yeah, I am. I've still got a little bit of TUR in my portfolio. And I got out of that yesterday. Really? Oh, I got out of that now. And then the whole thing explodes. And then everybody starts to backfit, including Martin Armstrong, which is really frustrating. Listening to Armstrong this morning on his blog talk completely about Turkey's structural imbalances and how crazy President Erdogan is, and discounting completely that the U.S. is pushing on this problem, and that the U.S. that there are geopolitical imperatives here that help push this crisis to this point. It has. And so at some point, everybody loses their patience with Erdogan. That may be cyclically true, but to discount that there's not a geopolitical angle to this is insane. There's a great article this morning over at Moon of Alabama. B's got a great article kind of going over the history on this, including, the economics, which he gets right for once. Kind of detailing the history on this, which I'll put a link to down below so that you guys can read it, because it's important to understand what's happening here. It's a mixture both of strategic moves geopolitically and tactical moves in a hybrid war sense, and while using the structural imbalances created by Erdogan to bring us to this point. And what would be over at Moon of Alabama reminds everybody is that Turkey got screwed. Turkey's the one who's left holding the bag and I've said this before in different ways, left holding the bag of the failure of U.S. policy in Syria. They were, Erdogan spent a lot of money supporting that war. He spent a lot of money paying for refugees from the fallout of Syria, and his expectation was he was going to get half the country. He was going to get Idlib. He was going to wipe out the Kurds in Afrin. He was going to get, he was going to expand Turkey to the south. He's probably going to get the other half of all of Cyprus, possibly parts of Greece. That's what he was going to get. And the U.S.'s failure in Syria has now exposed him economically, because all the debt has to be paid, right? Because that's why he refused to allow the Turkish central bank to raise interest rates and blah, 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 blah. So this is very important. And, a lot of people are out there downplaying this morning, oh, well, there's contagion risk. Well, it's only $50 billion and it's like this. And I don't think I think the Europe and the U.S. banks will get their noses bloody, but it won't be enough to take anybody down. I'm like, they always say this right before everything goes completely haywire. It's the same shit every freaking time this stuff blows up. It's been just over 3 years since the Greek debt crisis. It's time for another one. And I think between now and November, we're going to see this completely spiral out of control. And we're running up against the late November cycle turn, one of Martin Armstrong's cycle turns at the end of November. So we can obviously see this stuff starting to unfold. So this has tremendous implications for Europe. And that's the way it's going to be. All right, so the last two things I want to talk about this morning, because I got, before I get to the charts, I'm going to talk about Gazprom real quick. Gazprom's going to be fine through this. The Russian ruble is being attacked at the same time as the Turks are. Makes sense, right? There's going to be some ruble weakness here. That's fine. It doesn't materially affect Gazprom's operations at all. If anything, Gazprom is going to come out of this smelling like a rose, because they're going to be able to get even more assets from Turkey at cheaper prices. So they're going to get TurkStream built on, even cheaper in ruble terms, because, local Turkish contractors are paid in the value of the lira. And at the same time, the Russians are going to be able to do a little bit of ruble diplomacy. Gazprom's dollar price will be affected here, right? Because the ruble will drop, and that'll cause the dollar price of OGCPY, the ADR, to drop. That's fine. Use this as an opportunity to accumulate more, because nothing's going to change here. Now, Erdogan, if he wanted, my point in the article I wrote on Friday was that if Erdogan was going to bow to the United States here, he would have already done so. And I like to use him as a bellwether for where things are in the geopolitical landscape. Erdogan is a cockroach. He goes with whoever is winning. He scurries into the darkness, into the shadows of whoever's winning. He's defying the Americans, and he's making nice with and he's calling Putin on the phone. He's making nice with the Russians. Guess what? China is going to step in here. China will step in and stabilize Turkey's markets. There's going to be failures of the companies that are most indebted to U.S. and European banks. They're the ones that are going to be left to go bankrupt and default on their debts. Everybody else will be bailed out. You wait. That's what's going to happen. That's what I said on Friday. That's why I think that this in some ways was invited by everybody. Because there's no way out of the situation for Erdogan except for making everybody pay. If you're going to take me down, I'm taking everybody with me. Because if you don't think that the guys on Wall Street are thinking the same thing, and you don't think that the financial warfare division of the CIA and the DOD, as Jim Rickards likes to remind us of all the time, how they war game this stuff. If you don't think that that's, you don't think the Russians and the Chinese and the Turks are thinking the same thing, then you're naive. But I know you guys aren't naive, because you listen to me. I hate to bust my hand, pat myself on the back, but I'm right about this. I know I am. It's going to be hard. Everybody's going to pay. This is going to be ugly. But Erdogan is not going to be deposed from power any more than the mullahs are going to be overthrown in Iran. And this is where Martin Armstrong's understanding of the situation is. He's wrong. He was handicapping Putin getting overthrown in 2015 as well. And guess what? He was wrong. So, all right. So, You guys wanted me to talk about Gazprom. I think it's good. I think it's fine. Don't worry about it. Buy it long term. Keep accumulating it. And then Bitcoin we're going to talk about when I get to the chart in just a minute, which we're going to do right now. So let's talk about gold. Gold did not reverse this week, but it did put in an inside bar. And if we are going to get a reversal in gold, which I think we are going to get here, because we're up to this is a 5-week downtrend in gold. This is rare. So I don't think a reversal here is going to give us a new bull market or anything. I would call for a reversal back up towards about 1250 or so. That high there looks like a good bounce level to relieve some of this pressure. We could still get further weakness, especially if it's true that the Chinese are managing the gold price on the Shanghai exchange to keep it stable relative to the yuan, which is an article that I saw on Zero Hedge earlier in the week. If that's the case, then yeah, we're going to see a little gold. We're going to see some structural gold weakness for a while until the Chinese are done devaluing the yuan, and then at that point, everything may change. So that's where we are in gold. Here are your statistics for the week. It was an inside bar, so which means low volatility, and that means high potential for something to happen, either continued weakness, which is low, or a potential for a break back in the opposite direction is also very high. And we could see a snap. We could see a snap up to 1250 and an immediate collapse too. Right now, markets are volatile and choppy enough that we could see anything, especially now during the summer, because gold is always traditionally weak, very weak during August. All right, unless there's significant stuff happening, like in August of 2011. But generally speaking, when the gold market is under control and confidence in central banks is still high, August is a weak time. When confidence in central banks falls, then all seasonality is off. Now let's talk about the euro. A lot going on in this chart here. Remember, I told you a couple of weeks ago, or last week, that there was a 2-bar bearish reversal here on the euro, which was a harbinger of what was coming with Turkey. And then on Wednesday, I told you that we were in serious danger of a breakdown, and then we got that collapse. And this collapse in the euro is directly tied to potential contagion risks into European banks. All the European banks, all the major European zombie banks are all heavily exposed to Turkey. And that's going to put a run on the euro. And that's going to put pressure on the euro. It's going to put upward pressure on rates of Spanish, Italian, Dutch, and French debt, and downward pressure on the euro. We've got 3 weeks now. Probability of a low break and a possible, kind of spike low and then bounce higher, because the ECB is managing the euro. If any collapse in the euro that happens is going to be managed, unless they can't manage it. And what we want to watch for here is that the European Central Bank can't manage this. If that happens, if Erdogan goes to the mat and goes all the way to the mat with the United States over this, then the lira is literally going to blow up to like 12, and that will take the euro down to parity. Okay? Because at that point, the threat of default, effective default, is already there. And I'm sorry, but all these high-minded analysts on Wall Street who bet on small moves and bet on normalcy bias by markets are not looking at what happens when interest rates really start to move, and the amount of money that's been pushed into interest rate derivative swaps at these incredibly low, depressed values for bond yields by the ECB, by the Bank of Japan. Means that very small moves in interest rates are going to cause cascading collateral calls and cascading margin calls. And then the whole thing spirals out of control very quickly. Turkey is not the only thing happening here. It's going to have contagion risk. And I think that the Russians and the Turks and the Chinese and the Iranians, to a greater or lesser extent, are inviting some of this because they understand what's at stake, and they're going to try and take down they're going to try to take everybody down if they have to, and that's the art of the deal. And that's why I've been saying for a long time that I think Trump is going to lose this war. All right, so let's watch this carefully. All right, Bitcoin. We got the collapse last week, and then we got a collapse into a low yesterday or over the weekend. Down to 6,000, and then we closed around 6,300 yesterday. And this is this morning's price action, not committal in any way, manner, shape, or form. These are your numbers for the week. There's not a very high probability of a high break, not particularly great probability of a low break. It looks to me like this is a pivotal week or two for Bitcoin here. It's got to hold the 6,000 area and start setting up strong support and a strong kind of trading range between 6 and 8,000 and seek that new level and maybe trade that way for a couple more months. All right, so that's what we're looking for. Any structural, any weekly close below 6,000 is very bearish. And then you're looking at, 5,000, 4,000, 3,500, that kind of thing. All right. Very important. All right. So that's, and that's as simple as it gets for Bitcoin at this point. It's not a particularly difficult situation to analyze. 6,000 is important on the low end and 8,000 on the high end. And you hope that at this point that becomes a tradable range for a while and the volatility starts to tampen down, because that would be, that needs to happen if this is going to be if this is ever going to break from being a tradable asset class, as Martin Armstrong now talks about, and he's right. It's not a currency yet. It has the potential for currency, but it's not there yet. But right now, it's just a tradable asset class. All right, that's what I've got for this week. You guys will talk on Wednesday, and we'll have some more clarity as to what's happening, and we'll see what happens. You guys take care. You have a great day. Talk soon. Keep your stick on the ice.